And it's exactly the same in trading. Our objective as traders is to focus on perfect execution of this one trade, not worrying about the past, not thinking about the future, but following our simple set of rules on this one trade. And if we focus on perfect execution, and if we focus on the process of trading, the cash will take care of itself.
January 27th, 2026. Let's look at the strategy and see how it came into effect today with TQQQ NASDAQ. I took 4 trades today, and one of them was a loss. So far our win rate for the past 3 market days, 3 trading days, is very high. It's around 90% because we've only had 1 loss and we've taken well over 10 trades. So we're looking at the 92 to 96% chance win rate, which that doesn't mean that's what it's always going to be. It just means that the market is rewarding the structure and discipline that I am following, the plans and the rules and the strategy. I only use one strategy. Let's look at the daily momentum, because my strategy is built upon stacking momentum. Imagine a bunch of layers of momentum stacking on top of each other. That is literally as simple as it gets with regards to with a metaphor on my strategy. So what do you see right here? Look at this. The MACD tells us the momentum. Specifically, the MACD histogram bars is a visual representation of what is happening to the momentum. Is the momentum of selling increasing or is it decreasing? So right here, before our market opened today, before, we can't tell into the future, we can't see the future, we don't have a crystal ball, but we knew before the market opened that our daily momentum is building buying pressure to the upside. This would be even more important if our volume was rising at the same time, but it's not. Otherwise, this would be even more important. This is what Wyckoff calls a non-validation, but that's neither here nor there. Our daily momentum is increasing. That means we have an upward bias, okay, before the day even begins. So let's look at the market day and see what we can derive from what happened. Does it look like we had an upward move today? The initial few minutes, we had a sell-off, but then the rest of the day, we had that momentum that we just talked about on the daily MACD. We saw it manifest. So we're going to talk about that. And to look at the strategy, to see how the strategy performed, we need to see the 5-minute twins, the 5-minute regular hours and the 5-minute extended hours. These are 2 different data sets that tell us 2 different things. So let's see what happened today. Let's go to the beginning of the market. What do we see? At the beginning of the market, we have this sell-off. And this red dashed line is the pre-market high. This red, slightly faded pink dashed line is yesterday's high, the previous market day. How interesting is it to see the price action play with the previous day's highs and lows and pre-market highs and lows? I generally avoid taking trades for the first 10 to 20 minutes of the market because it can be so crazy. But look what happened right here. My intuition told me to take a trade here. I did not take it. Had I taken the trade right here, this would have been a grand trade. The price never would have come back. It would have been amazing. But I didn't take the trade. Why? Why did I hesitate? Because this hadn't crossed over yet fully, but this already had. There was no reason for me to not take this trade. I missed this opportunity. I failed to take action. This was the trade I should have taken. And it's, it sucks, but that is what it is. I missed it. I absolutely missed it. Now, this orange line here is representing this new strategy I'm developing, which only uses the 5-minute chart instead of the 1 minute or the 2 minute. It's just a 5-minute strategy where I align the momentums with the 30-minute data, and I align those momentums with the 2-hour data. So I'm using the 2-hour and the 30-minute for higher time frame confluences. But regardless, look at this. What do you see right here? Anything? You notice anything interesting? A volume confluence on the right side of the momentum. So our 5-minute regular is already aligned to the upside. That's great. The 5-minute extended hours is now flipping. It's in the process of flipping, and at the time of the flip, we get a volume confluence. So that would have been my entry right here at the close. That's where that orange line comes from. That's why you're seeing this orange line on the 1-minute chart. That's what this orange line represents right here. So that's just interesting to note that this 5-minute power volume bar strategy very much has a high win rate. I don't know what the win rate is yet because I haven't done sufficient amount of back tests, but I can tell you this, I'm going to be putting this 5-minute strategy into practice in the near future, especially if we have some sort of confirmation from the 30-minute, and especially if we have backup from the 2-hour. If the 2-hour and the 30-minute are giving us permission, and then the 5 minutes align and we get a power volume bar on the 5-minute chart, that is not something to ignore. That's a strategy in the future that I will be using, I will be trading. It's more hands-off, more distant, it's less intense. The 1-minute trading that I'm doing is considered very intense. You can be in and out in seconds, so you have to be really on top of your game. Otherwise, you can lose a lot of money and you can make a lot of money. Okay, so let's go on to my first trade. I missed this opportunity. Why did I miss this opportunity? This was a volume confluence on the right side of the momentum with the higher time frame 5-minute twins giving us permission to take the trade. Had I entered here, it would have been a win, but sort of not really, because look, let's just see. The entry would have been at the close of this candle, the stop loss slightly below that candle. That first profit target never got hit. The stop loss got hit before the profit target got hit. So this would have been a loss, okay? I entered late. I entered on this next candle. Why? Because I was childish. That's horrible. That goes against the rules. You always want to take the first opportunity. You never want to take the second opportunity. You never want to be late to the party. And I was late to the party. Did I lose money on this trade? I almost did, but I actually took profit. I took micro profits because my intuition was warning me to get out of the trade. This MACD was starting to build to the downside. So as soon as it got slightly above my entry, I actually just exited for a very small win and ran away. And it's a good thing I did that, because my stop loss would have gotten hit and it would have been a loss. So that's interesting. Do we have any more occurrences of the strategy? Well, let's see. The 5-minute is now stalling and now it's building back upward pressure. Do you see this? This 5-minute is not. This 5-minute is just selling off. The 5-minute regular is selling off. This one is now stalling and building upward pressure. Okay, that's a signal. That's something to pay attention to. See that? We have confirmation now. At this very current point, the candle right before this, when this was happening, we had a volume confluence as the MACD of the 1-minute was doing a crossover. So that's pretty exciting. That's also a strategy I've been developing, which is like, what is the statistics when you just say, okay, if we have a power volume bar right when the crossover is occurring, what are the statistics? What's the win rate? What's the win percentage? What's the maximum profit, maximum drawdown? It's a fun thing to investigate, and I'm currently investigating and doing some back testing and some data analysis. Nonetheless, this wasn't technically a proper trade. It would have been a win, but it wasn't a proper trade because the 5-minute regular was selling off. It wasn't building upward momentum yet. This 5-minute was stalling and starting to build upward momentum. So that would have been your only permission to take the trade at that time. We continue to rise up a little bit, then we reach a top around here, and we reach a top around right when the 5-minute starts to flip over and build momentum to the downside. That's why I put this marker here. I knew this was happening in real time, and I freaking missed this gem. Why did I miss this gem? Why? What happened? We get a volume confluence. As we get a tick down on the momentum, the histogram of the 1-minute, our 5 minutes are already giving us permission to take short trades. So that was the entry that I missed today. And how mad I was. I was so mad. The entry was right here at this close of the candle where the volume confluence occurs. Then you put your stop loss slightly above that candle. And look we got a full hit. All profit targets were hit. And we even breached down to the VWAP before we just perfectly bounced off this VWAP. Look at how crazy this is, by the way. Just a perfect, just boop, barely touched and then right back to it. Pretty interesting how that VWAP has a lot of power. So that's a trade that came into effect today that I also missed. And then I had 2 trades at the end of the day that we're going to go over. The first one was a loss, and then I got back in for revenge, and I actually won because I was following the signals. Look, as we're approaching this final 10 minutes of the day, the 5-minute data is telling us we're gaining selling momentum. The selling is increasing pressure to the downside. But the 1-minute MACD had not aligned yet to match with this information. But it did start to line up right here. That's why I entered the trade. The MACD is now flipping to the downside. We got a volume confluence right here. Volume bar greater than the previous 3. So I entered the trade, and I don't know why I didn't take profit. Oh, I didn't take profit because it didn't fully hit. So the entry was here, close of the candle right around here, put the stop loss up here. it didn't really let me take profit right here because it happened too fast. So I didn't get to capture profit at the first profit target. And it pulled back up, hit the stop loss, and stopped me out. So that was a loss. But then, as the last 10 minutes started to unfold, right here, it happened again. It stopped me out, and then the very next candle, boom, right back down towards that direction. So I said, you know what? I'm not going to let this get away from me because this is very obvious. There's a lot of pressure and a lot of probability to the downside. So I entered right here to close that candle. Stop loss slightly above. First profit target was hit, making my money back. And then I got some more additional profits too right before close. I took the trade only because the 5-minute data was telling me it was still time. The probabilities were still aligned to the downside. So when we got that volume confluence on the right side of the momentum, it was time to get back in. I got in with a slightly lesser size than I had just lost, just because I didn't want to be too much on the revenge side, so I reduced my position size. Right back in for a win, and that was the trade recap for today, January 27th. I'll see you in the next one.